G'day folks, welcome back to Pete's Investing. It's April 15, 2024. This is the natural gas, copper, crude oil and iron ore update. And you can see there natural gas and iron ore have both risen since our last review. Copper and crude have dropped slightly. So looking at the heat map first, you can see there on the top left on the monthly, weekly and daily trends, natural gas is still bearish on the monthly, but turned bullish on the weekly and also on the daily, so looking good at the moment. On US crude, it's still bullish on the monthly, weekly, bearish on the daily. High-grade copper likewise, but it's turned neutral on the daily, and iron ore is mixed. So for monthly, weekly, daily, you can see there the other heat maps for all the other instruments, which we cover on various days as well in other videos. So first look at natural gas, again for the monthly, weekly and daily trends. We base that on the CCI 150. You can see there on the monthly it's broken below the moving average band. And I've got a color scheme up here which imitates the CCI 150 chart. That's bearish, so it's showing a pink there. On the weekly, it's turned into a fresh bullish movement in that bar there. And on the daily, it's been bullish for some time with a couple of neutral and a very slight bearish movement to the downside. But at the moment, still predominantly bullish. So looking at the daily chart first with the hourly chart, again, it's bullish on the CCI 150. The ADX 25 is also bullish. And if I zoom out on the stochastic market forecast, it's still in the oversold territory. And we may see a bit of a move to the upside slowly in the coming days. On the hourly chart, start with that stochastic market forecast indicator first. It was oversold down here. And it's moved up between the 10 and the 25 area of that indicator. Now on the price chart, we did have a couple of, you can see there are a few, let me just get rid of some of this. It's got a few bearish divergence. There was a bearish divergence there versus higher highs on the price. There's another bearish divergence there, and each of those broke down. Now this one, you can see there, this one broke down almost as far as a 61% level and bounced, and this one currently it's broken just below the 61% level and bounced from there, so still made a significant move from the 61% level, which is always a key area to look out for. Now in terms of trading this, you can possibly trade on the intraday time frames like the 1 hour, 2 hour, etc. But again, as long as the daily and especially the weekly are aligned in the long position, which they are at the moment, on the CCI 150 you can take long trades only, avoid taking short trades. So for example, back here, let me just get rid of this Fibonacci. As a trading idea, for example, when it broke above there, so long as it's bullish on the weekly and daily, you can take those bullish trades as well and close out the trade when it breaks into that moving average band. Take another long trade there and close it out there, and then avoid taking these long trades as it declines. Probably start taking further long trades in that point there, for example. Go long and close it out when it touches that moving average band. And then when you see a bearish divergence, just be careful. The price is making higher highs, but in this case the CCI is dropping off and eventually did drop off. So always take heed of those bearish divergences if you're going long. Next we'll look at US crude, and again on the monthly, weekly and daily trends. You can see there it's bullish on the monthly, bullish on the weekly, although it's starting to turn down, and on the daily it's turned bearish. It's actually just broken below the moving average band. So avoid taking long trades until we see this break above the moving average band again on the daily. So again, looking at the daily chart first, you see that it's bouncing off that 50 level, making further upside. The ADX is also bullish. So again, notice on the daily though, it's broken below the moving average band. So avoid taking long trades until that breaks above that moving average band, as I said. On the hourly chart, the stochastic market forecast is in the overbought territory, so we may see a bit of a retrace to the downside. And then zooming in here, you can see there we had while it was long during those periods, you could have taken long trades on the 1 hour chart or in the intraday chart. So again, going long when the CCI breaks above the moving average band and close it out when it touches the moving average band. And during this period, avoid taking long trades, even though the prices are making new highs. You can see there are higher highs on the price. There was a bearish divergence there, and the price eventually broke to the downside. Currently still fluctuating in this 23-38% range. It's been doing that for some days now. High grade copper trends first. Looking at the monthly, see it's bullish. broken above the moving average bands, bullish on the weekly. And you can see there it's neutral on the daily. It's broken down, so avoid taking long trades or short trades. Which avoid taking short trades when you're going against the trend. And looking at the daily chart again in more detail here for trading, and this is on the hourly chart. First of all, zooming out on the stochastic market forecast, it's bounced off that 50 level, so still in a bullish area predominantly. Although again, just be careful, it's broken into a neutral stage on the CCO 150, which is our main trend indicator. The ADX is still bullish, so we just wait for that to break above the moving average band to take long trades. Also notice it's hit this resistance at 43,568, so again, wait for a pull above that level and preferably above this resistance as well on the daily. On the hourly chart, you can see there it's still in the overbought territory, so you may see a bit of a retrace to the downside. And if we zoom in, again, similarly to high grade, we've got the bearish divergence there versus a bullish higher highs on the price. And it's been bouncing just off that 23% level, and it's hit the target area after hitting that area, and it's currently fluctuating between the 23 and that resistance up there at 43,568. So again, wait for it to break above the moving average band to take any long trades. Next, we'll look at iron ore. Now, there's no CCO 150 on the monthly, but on the weekly, you can see there it's broken into a neutral stance. So avoid taking long or short positions. The daily's broken up into a positive or a bullish situation. So very carefully get ready for that weekly to break to the upside of that moving average band to take long trades. On the daily, first off, we've got the stochastic market forecast here. It's broken below the 50 level, so predominantly bearish. But notice if I zoom in on the daily, it's the CCO 150 is broken above the moving average band. So carefully going long, but I prefer to wait for the weekly to also be in a long position to take those long trades. The ADX is bullish on the daily, and on the hourly chart, notice it's broken below the 50 level, so predominantly bearish based on that indicator, although it's making a break to the upside again and just about to penetrate the 50 level. And if I zoom in, you can see there we had a couple of bullish divergence versus lower lows on the price. There was the first one there, bounced up, hit our target, and then the second bullish divergence versus lower lows on the price, bounced up, hit our target, and it's actually gone a lot higher and almost to the 100% level of that Fibonacci range if we were to draw a Fibonacci. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.